So the market's been pushing up for the last week, starting on the 9th since our last video. We talked about how we potentially have the opportunity of pushing back up to this resistance level of this descending channel or potentially breaking down to the downside. So the question today is, are we going to keep pushing up or are we going to finally get rejected and start pushing back down? What's going on, guys? My name is Xander with Phaser Trading Academy. If you guys are new here, consider subscribing. If you guys find this video valuable and learn something, smash that like button and share it with a friend. And let's go ahead and jump right on into it. So if you guys have been following this channel and you guys have been subscribed, you guys would know that we've been trading over the last year in this descending channel marked by these two white lines. This bottom one's the support, top one's the resistance. And over the last week, we were consolidating a week before this, and we were expecting to either break down to the downside or break up to the upside. The reasons for that was the CPI report was coming up and Jerome Powell was speaking, and it didn't exactly go how I guess a lot of people were thinking, including us. We weren't exactly predicting what was going to happen, but we were anticipating that if Jerome Powell does speak on potential rate hikes and anything of that sort, we'd have a better understanding of where the market's going. And then the CPI data, we're expecting for that to come in and react to that. So that happened on Tuesday and Thursday of last week. And so what happened on Tuesday, when Jerome Powell spoke, he didn't really talk about anything that had to do with rate hikes. He pretty much just said that, hey, we're just going to keep the Federal Reserve neutral as far as any political affiliations and anything that has to do with policy. We're just going to keep our own thing and do our own thing, and we're not going to be trying to satisfy any particular side of any particular issue. So obviously that didn't really touch on anything that had to do with rate hikes. So the market continued to anticipate positive sentiment. And then with the CPI data coming out, that entire week building up to Thursday when the CPI data was released, and it was actually released as expected. So it wasn't better, it wasn't worse, it was pretty much what was expected. So throughout that entire week, people were pricing in that expectation. So when that release came, we didn't see too much of an overreaction either direction, just because it was already what was expected. And so that brings us to today. Today, obviously, the markets are closed on Monday for MLK. And then tomorrow, we're going to have the first day of the week. We are literally at this resistance at the top of the channel. We tested it twice before, a couple weeks ago, about a week and a half ago, and then 2 weeks ago, we tested this resistance level. We're testing it again. We've gotten rejected here multiple times. So back in March of last year, got rejected, didn't quite come up here in May. And then September, October, we were testing this area, and then now we're testing it again. And a lot of people are getting really excited that we are, switching to a bull market, or we're finally starting to see the market recover. But the truth of the matter is, until we break this resistance to the upside, until we close above this mark, above this channel resistance, you can't really say that we are switching direction. We're still in a downtrend. We're still in a bear market. So if anybody is saying that, they clearly don't have an understanding of the technical elements of the market. So just keep that in mind. And that's just on a daily chart. Now, zooming in a little bit closer to kind of fill in why we saw this this push to the upside, besides the things that we just talked about, we actually had two gaps that we had to fill. So the first one here was between 398 and 394. That was the first gap. And then the second gap was from 389 to 386. And so we saw that gap fill here on the 9th, on Monday, for that first gap. And then the second gap got filled on Thursday after we got the as expected CPI data. And so now we're at this resistance level right here at the top channel trend line. We're looking at the daily chart here. And not only that, we're also at the volume critical price point level right here, which is this solid red line going into this blue. And this is the volume profile. So we're at both that resistance, we're at the volume profile level. We're also at a resistance level here on just support and resistance levels from previous historic data that we've collected, right? So this acted as a resistance coming up, and then this acted as a bit of a support here. We formed two channels actually, and so this is literally where we're at as well. So we can even extend this line, and it would still make sense for us to have this line here. And so that's basically what channel we've been trading in. And so this is currently where we're at. And if you look at the RSI, we are starting to approach overbought territory. We're not extremely overbought, which would be 70 and above, but we are in this overbought area. And so if you look over here to the left, every time we were at this 60, 61 range, we ended up seeing the market at this resistance level, and then we pushed down, right? 60, 61 range right here, even around 58, actually, market was up, found that resistance, pushed down. We were super extremely overbought over here, but again, at that resistance, push down. On the MACD, so that's kind of what we're expecting moving forward. We're expecting to get rejected by this channel resistance. And we spoke about this last week in last week's video when we were waiting for all of this to pan out. We were saying that there's a potential for us to come back up, retest before we head lower, or we might just break down and start heading lower right off the bat. We ended up going with the first one. We broke up to the upside, tested this resistance level, and now this week we do expect the market to potentially even hover around here or get rejected starting tomorrow and start heading down. We have seen some downside in the NASDAQ, and so I'm going to pull that chart up for you guys and show you guys that in a little bit, so stay tuned. And that's kind of what I'm leaning towards, because we have been seeing selling pressure in the NASDAQ market, and that's represented on the chart. So it is reasonable to expect for us to continue to see selling going into tomorrow, especially with a week of profits or a week of long positions, doing really well, for the bulls to do really well in this market. I do expect us to see some pullback. MACD, we're not seeing any signs of a green to purple switch, which would indicate that we're starting to switch directions. But again, today we had the market closed, so it's a little difficult to say until tomorrow opens. Once we do see that change of color from green to purple, that will just confirm to us another confirmation that, we are getting rejected here and we are going to start heading down to the downside. So that's on the big picture. That's kind of what we're seeing. Zooming into a 15-minute chart. Obviously, we haven't, seen too much crazy action. Again, this entire week, starting Monday, we saw a little bit of a push, pulled back, found support at this resistance or this support level, and been pushing all week long. So I do anticipate that we're going to see a pullback to the downside. Besides that, let's go ahead and take a look at the NASDAQ /NQ /NQ. So in the NASDAQ, looking at the 15-minute chart, we have been showing signs of a downward, price action. We closed here on basically Friday is where we closed. Oh, sorry. Let's go ahead and reset this real quick. So the last day that we closed was Friday, which was this day right here, and that was the closing price. We are below the closing price today. We closed here on Friday at 11,602. We did see a strong push to the downside, tested this 180-day simple moving average on the 15-minute chart, and currently we're at 11,587. So we are below where we closed on Friday. I do anticipate that we might see some downside here on Tuesday, and that might set the stage for more selling to go down on the rest of the week. So that's kind of where we're seeing, the pullback happening in price action. One more thing I did want to mention about the SPY, was the fact that, even right now, the markets are not completely, open on the SPY. However, we do see some downward momentum here as well, downward price action going on. So I do anticipate us pushing down to the downside. A couple levels that I want to cover with you guys to watch out for. So obviously that top channel resistance that I was talking about, that's going to be one level. We're currently at a resistance level. So this general area is one to watch out for. I would say 397 to 400 as a resistance. The first level to the downside that I'd pay attention to would be 388 to 387, 386, that general area. And then a strong support down here at 374. Now, if we do end up seeing some push to the upside, I would be expecting us to obviously, break this 400 level and then head up to 410, 411. Those are the two levels to the upside, and those are the levels to the downside. So to the downside, I do anticipate if we do see some pullback happening, that first important level that we probably reach would be that 374 level, just because this seemed to be a really strong, magnet for the price action to go to. So that would be the first level, 374. And if we do break this level to the downside below this, that next level would be 354. So we're going to have to see where Tuesday opens up and where the price action is headed. Again, downside, we got levels right here at 388, then 374 and 353. Upside, we have 400 and then 410 to the upside. So those are the levels for the market. That's kind of the breakdown from the technical side. What we're expecting. So these dotted lines here, if you guys go back to some of the videos, these are what we were anticipating was going to happen. We did anticipate the market to start pushing up the beginning of this year. Obviously, I wasn't trying to say that we're going to just skyrocket right away, but the point was we were heading up to the upside. And you guys can see that in some of the previous videos when we talked about it. So let's go ahead and add some more, I wouldn't say predictions, but anticipations of where we think the market's going to go. Because as you can see, every time we did a prediction, I guess you can say, it did end up panning out. So I do anticipate we're going to find some resistance here. And then this next level, we're going to have a push down to the downside right here. So this is kind of what I'm expecting in the next week or so. And then you guys can come back and double check and see if that panned out or not. We do have the rate hikes going up on, I believe it's the 1st or so of February. So end of this month, the beginning of next month is when we're going to know the exact rate hike. It's between 25 and 50 basis points. So let me know in the comments below what you guys think it's going to be, whether it's going to be 50 or 25. My personal opinion is it's hard to say, but I'm gonna go with 50, just because of how aggressive the Fed has been. And I do believe that they're gonna, they would rather overkill than to underdo it and have 25. So the talks are between 25 and 50. Let me know what you guys think it's gonna be in the comments down below. And then a couple other things I wanted to cover in this video is some economic data that we're gonna be seeing this week. So obviously, if you guys go to investing.com, you guys can pull up this weekly economic reports calendar. And so obviously today we were closed. The next big thing is it would be the core retail sales here on Wednesday. Tomorrow, we don't really have anything too crazy. We have the OPEC monthly report coming out. We have the FOMC Williams speaking. It will have obviously an impact on the market, but I'm talking about something that's going to have a very important impact on the market, a very strong impact on the market. And that's going to be anything with the 3 stars. That's just how important it is. Obviously, with the 2 stars, it's still important. But the 3-starred reports are going to be the most important for you to be paying attention. That's what's going to move the market the most. So Wednesday, we have the core retail sales month over month coming out. The PPI month over month coming out. The retail sales month over month coming out, and that's on Wednesday. Thursday, we have the building permits coming out, and then we have the Philadelphia Fed Manufacturing Index reporting as well. Also, crude oil inventories on Thursday as well, to keep that in mind. And then Friday, we have the existing home sales being reported. And that is pretty much the important events that are happening. They're going to move the markets the most this week. So pay attention to those. Make sure you guys have this up and pay attention to the numbers and see if we're underperforming or overperforming of what was expected. You have the forecast here, you have the previous here, and then what's going to be reported is going to be right here into the actual. So those are the reports. If you guys enjoy this video, if you learned something new, please like this video. It helps to support the channel, gets this channel out to more people, and that way they can have a little better sense of the markets. If you guys enjoyed it, subscribe, like this video, share it with a friend, and I'll see you guys on next week's Stock Talk video.